Board with Real Estate Talk in the morning. All right, y'all. So today, what we're going to be talking about is this article called "Think Twice Before Waiting for 3% Mortgage Rates." Now, as a matter of fact, as early as yesterday, I had a woman, a sister, come to me, and she's like, "Well, Khalid, should I kind of wait for the mortgage rates to go down?" Um, I don't particularly think that that's a good idea. So that's what we're going to get into with this article. So let's kind of break it down and see what this article is saying. I hate this. I hate this mouse. So we're going to be talking about real estate stories also, man. So it says that last year the Federal Reserve took action to try to bring inflation down. So if you don't know what inflation is, it's the cost of products out there. When you go to the store and white eggs that used to be 79 cents are now about $5. Okay, that's inflation. So in response to those efforts, mortgage rates jumped up rapidly from the record lows we saw in 2021. So 2021, what was everybody doing that owned a property? They were refinancing. Why? Because interest rates were at all-time lows. Okay, so we saw interest rates. Even I personally, I have properties that I refinanced during that time. I got a 15-year loan for about 2.6%. Okay, so they went from those lows to peaking at just over 7% last October. Hopeful buyers experienced a hit in their purchasing power as a result, and some decided to put a pause on their plan. So what actually happened was that we were at all-time lows, and then people kind of saw the market rate go up. Actually, the interest rate doubled. We've never seen that before. The interest rate doubled. All right. In 1 year, one calendar year, the interest rate doubled. We never seen that before. So what would happen, just to explain it to you, is people were going out and maybe they could afford $400,000 worth of house. Okay. So they were going out with their realtor and they were driving around. Okay, I'm pre-approved for $400,000. So that's when the mortgage rate was at all-time lows, when it was at 3% or 2.5%. And believe it or not, at that time, I still had people saying, well, I'm going to wait for the interest rate to go lower. And I'm like, listen, we're at all time lows. You need to get in now. Okay. I'm going to wait. I'm going to wait. Maybe they'll go down to 1%. Okay. But um, what happened is when the mortgage rates doubled, now those people who before could afford $400,000 worth of home, now they can only afford maybe $250,000 worth of home. All right. So we see that out there, and a lot of people put brakes because think about it. If you can afford a $400,000 house and then you go to a $250,000 house, it's a big difference, right? That's a huge difference. So people saw that and they're like, okay, wait. So they put the brakes on their buying plans. So today, the rate of inflation is starting to drop. Okay. Now, eggs are still high. Eggs are still super high. But of course, we've seen gasoline drop, right? So gasoline isn't as expensive as it was maybe like 6 or 7 months ago. So we've seen the rate of inflation starting to drop. And as a result, mortgage rates have dipped below last year's peak. All right. So the chief economist of Freddie Mac, he said, and I quote, while mortgage market activity has significantly shrunk over the last year, inflationary pressures are easing and should lead to lower mortgage rates in 2023. And that's what we're looking at. We're looking at mortgage rates to come down a little bit. But here's the thing, they're not going back to 3%. They're not going back to 2%. This is the new normal that y'all really have to get used to. Okay. So if you're out there and it's kind of like, oh, well, I'm going to wait for mortgage rates to go down, it's probably not going to happen. All right. It's probably not going to happen. And that's really where I wanted to get on here and kind of educate you guys as far as to what's going on. So The Fed, I mean, they've been putting their foot on the gas. They've been raising interest rates, and meaning what? The price of borrowing money. The price of borrowing money is going up. So with that, mortgage rates have gone up because you're borrowing money to buy a home. Okay, they're probably not going to go down for a while. So the article says that's potentially great news if you're a buyer aiming to jump back into the housing market. Any drop in mortgage rates helps boost your purchasing power by bringing down your expected monthly mortgage payment. This means the lower mortgage rate experts forecast this year could be just what you need to rejuvenate your home buying goals. So they're really experts are expecting mortgage rates to drop, but again, they're not going to drop to 3%. Okay. 3%, that was crazy. That was an absolutely crazy time. Okay. Um, it says, while this opens up a window of opportunity for you, remember, you shouldn't expect rates to drop back down to record lows like we saw in 2021. Experts agree that's not the range buyers should be banking on. All right. The chief financial analyst at Bankrate, he said, and I quote, I think we could be surprised at how much mortgage rates pull back this year, but we're not going back to 3% anytime soon because inflation is not going back to 2% anytime soon. And there's a relationship between the rates and inflation because we can't keep the mortgage the inflation can't keep going out of control. What did the scene look like in 2021 and some of 2022? 22. It was like a madhouse, right? People who were trying to buy homes. There's open houses with lines down the street, and it was just crazy at that time. Okay, it was just crazy. People were buying homes with no inspection, and they were paying $100,000 over asking price. It was crazy, right? Well, something had to give. We couldn't keep going because what would have happened if prices kept going up? If prices kept going up, then nobody would be able to afford a home. Okay. But the filthy rich. So prices had to come down. There had to be a pullback. And if you owned a home, you really saw a great equity run up. Okay, meaning that the money that you put into your home, as far as the loan that you have against your home, the lien that you have against your home, versus how much your home is worth, you saw a big run up. Okay, but if you wanted to move somewhere else, it was tough, right? It was super tough. So, in any case, it says it's important to have a realistic vision for what you can expect this year. And that's where the advice of expert real estate advisors are critical, like myself. You may be surprised by the impact even a mild drop in mortgage rates has on your budget. If you're ready to buy a home now, now is the time. Okay. So with the mortgage rate, the higher the rate, okay, because when you go to a lender, they're going to give you money based on how much money you make, okay, meaning your income and your debt. So your debt can't be over a percentage of your income. It's called the debt to equity or DTI, okay? So when the mortgage rate goes up, that means that you're going to be paying more money for that house, which means that you're going to qualify for less. Okay. So, bottom line here, okay, just to keep this short and sweet, bottom line is that the pullback of the interest rates is great news for buyers. Okay. The activity, and I'm in Philadelphia, okay, but the activity has gone way down, way down. All right. It's going way down. You don't see as many buyers out there because people don't really know what's going on. They're hearing all types of stories, and the news doesn't help at all. The news doesn't help. But bottom line is that if you're a buyer, now is the time to jump in. Okay. Like I said, I had a sister yesterday, and she's asking me about the mortgage rates. And I'm like, listen, if you wait, then what's going to happen? You may just be waiting for rates to go up. I also talked to a person yesterday who said, well, I have a low 600 credit score. Now, as far as credit scores, I always recommend around 620 or better. But she's like, oh, well, I want to wait for my credit score to go up. Well, here's the deal. If you wait for your credit score to go up, then what if interest rates go up also? Now you canceled it out and you just did nothing but wait. Okay. You're really timing the market when you say that. And most of the time, that's not a good idea because you don't know what's going to happen. Here's my advice. If you are looking to buy a home, what you want to do is, if you're in the Philadelphia area or Jersey or Delaware, definitely reach out to me. But if you're looking at anywhere else, definitely reach out to me. And then what I'll do is I'll hook you up with a realtor in your area if it's not Jersey, Philly, or Delaware. Okay, but you want to sit down with them first to get a plan, and then you want to go to a lender. All right. You want to go to a lender and get pre-qualified to see, okay, how much money can I get pre-qualified for? And then once you do that, then what you can do is, okay, what areas am I looking at? And then once you get that area, then what you can do is see, okay, am I finding a suitable home? That's what you really want. You want a suitable home. And when you go look at a home, there's three things that you're really going to be looking at. Number one is going to be the area. Okay. Slum zoning 101 and private property. Somebody wrote here on TikTok, they said slum lording 101 and private property. Absolutely not. Then who's going to run it? The government? Absolutely not. Yes, there are bad landlords out there. Okay, there are definitely bad landlords out there, but there's also a lot of good landlords. And truth be told, on the news, of course, they always shout out the bad ones. Okay, but there's a lot more good landlords out there than there are bad ones. Okay, so in any case, just to wrap this up, if you're looking to buy a home, now is the time to buy a home. Contact me so I can get you pre-approved. We can see how much money you can actually get, how much money you can get in grants if you're a first-time home buyer. All right. So now it's time for the realtor story. All right. So I'm gonna tell y'all a story about one time where I had a guy who almost walked out. He almost walked out of the no, he actually did walk out of the closing. So I was on the seller side. I had this seller, and we found the buyer and we did the transaction, and everything was super clear to him as far as how much money he was going to get. So we get to the closing table, and there were liens on the property. So these are his liens. Okay. So for example, if you are going to make $200,000 in profit, okay, from selling your home, but you have a $20,000 water bill, you're not going to get $200,000. You're only going to get $180,000. So he had these liens on his property, and the liens comes up. The who finds the liens? The title company. The title company are the ones that finds the liens. And that's what you have title insurance for. So they look, they find the lien, and he's like, "What is this?" What? And I'm explaining to him, "Hey, these are your liens." And he's like, "No, I didn't know about these." Oh, no. Now, yeah, the title company sends out before you go to closing the liens on the property, and I showed him what those liens were. But he's like, "No, no, no. This is, and he starts going off. Now we're sitting across from the buyer, and the buyer's agent. So they're looking at me. I'm looking at him, and I'm like, listen, I don't know what you want me to tell you. These are your liens. You got to pay these liens. In Philadelphia, if you have utility liens, they have to be paid off before you can get the monies. So he gets up and he storms out. But here's the thing is he storms out and goes in his car, but he doesn't drive off. He's just sitting in his car. This is an old man. I'm not an old man. He's probably like 60, 65. And he's sitting in his car pouting. And I'm looking at them. I'm looking at him. I'm looking at them. I'm looking at him. I'm like, all right, give me 1 second. So I mosey on over there and I'm just like, okay, um, my bro, what's the problem? So he rolls the window down and he starts, I mean, he's cursing and he's, oh man, and I'm just looking at him. I'm like, listen, I understand, but the house is falling down. You want to sell it, and these are your liens, so you really got to take responsibility for them. And he's like, no, but and he's giving me like excuses about the liens, and I'm just like, okay, I understand, and I feel you, but they still have to be paid. And he's like, oh. So he finally comes back. But when he comes back and gives us permission to proceed, um, something with the lender, because the lender's on the buyer side, I'm on the seller side. It was too late. This was Friday. So it was too late for the monies to be sent out. Because when you wire the funds, they only come at certain point in times. And if you miss that cutoff, then you done to the next day. And that's why I absolutely hate doing settlements on Friday. Because if something happens, then you gotta wait till Monday. You gotta wait till Monday. Okay. So we do it, and he comes back, and I'm like, but hey, we missed the cutoff time. So since we missed the cutoff time, I don't know what to tell you. We gotta wait till Monday. So at that point in time, he still had stuff in the property. He still had stuff that he wanted to get out. Now, mind you, he had 2 weeks to get this stuff out. He just didn't get it out. So he's like, oh, well, what about my stuff and what about my dog? I'm like, bro, you didn't take your dog? He's like, no, the dog's still in there. I'm like, all right, man. Um, the buyers was real gracious. They were super. Okay, so the buyer was like, all right, we'll give him 2 more weeks. We'll give him 2 more weeks. I'm like, all right. So they were going to go in and change the locks, the buyers, because now they own the property, but they were gracious enough to give us 2 weeks. In those 2 weeks, he didn't do anything. And the dog was just, I mean, this was a big pit bull. Neck was like this. Neck was like this. And he just left the dog in there. So he left the dog in there, and the other realtor went in, saw the dog, called the SPCA. Now, mind you, I'm not in the dogs at all, okay? But I think he said he paid like 500 or 600 bucks for this dog, some type of pit bull or whatever. So he goes in. The other realtor sees the dog in there, calls the SPCA. SPCA comes and gets the dog. So when the SPCA gets the dog, now he's calling me and he's laying me out. Oh man, they came and got my dog and da da da, and they changed the locks and ba da 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 and da 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 da, and I'm going down there and but man, he's going off. And I'm like, my guy, you didn't do what you were supposed to do. Matter of fact, before we closed, you had a month. And then after we closed, they gave us 2 weeks. And you still didn't get the dog. And you still didn't clean the stuff up. They own the property now. You already knew what this was. So in any case, he had to go down. I don't even know if he got his dog back. He probably went down to the SPCA and he probably got his dog back. And he got as much stuff out as he could, but they probably just trashed the rest of the stuff. So these are the things that real estate agents have to go through that y'all don't hear about. Y'all just see us out there just opening locks and doing videos and and going to the closing table. But there's a lot of stuff that goes into being a realtor. All right, y'all. This is Colin Nathan Aleem, the real estate boy. If you're looking to buy a home, sell a home, or invest in real estate, I got you. All right, y'all. Take care.